Surge Battery Metals is a Canadian-based mineral exploration company with a mission to lead the charge in securing a domestic supply of lithium, a vital component powering the electrical vehicles of tomorrow. The company is listed on the TSX Venture Exchange as NILI, on the OTCQX markets as NILIF, and on the Frankfurt Stock Exchange as DJ5C. At Surge, we're pioneers in shaping the future of clean energy. The company is developing its high-grade Nevada North Lithium Project at the heart of the United States lithium battery industry. With the highest-grade lithium clay resource in America, Nevada North boasts 4.7 million tons of lithium carbonate equivalent grading at 2,839 parts per million lithium, with substantial growth potential yet untapped. Nevada's emergence as a lithium battery production hub underscores the significance of our Nevada North project. Thanks to government support, the development of the Thacker Pass lithium mine, and Tesla's Gigafactory, Surge Battery Metals is at the forefront of this revolution. What sets us apart is our team of seasoned lithium experts who have a track record of delivering significant shareholder value. With leadership that developed a lithium discovery into a $490 million asset that was sold to Lithium Americas, Surge Battery Metals is positioned for another success story. However, our mission extends beyond mere exploration and development. Our commitment to innovation and sustainability has not gone unnoticed. Surge Battery Metals has been recognized as one of the TSX Venture Exchange's top performers, a testament to our dedication to driving positive change in the industry. We are also dedicated to fostering positive relationships with local communities and prioritizing environmental stewardship in all our operations. Join us in our journey to revolutionize the electric vehicle industry, one lithium deposit at a time. Surge Battery Metals, powering the future sustainably.
Well, hello, everyone, and welcome to Surge Battery Metals' first interactive webinar of the year. We hope you enjoyed that informative video about the company's great work, and we are thrilled to be holding this event with President and CEO Greg Reimer, along with geologist Steve Therrien. I'm your host, Ashley Berry, and as you just saw, Surge Battery Metals is the developer of a high-grade lithium claystones project in Nevada, which is geologically comparable to the proximal 4 billion Thacker Pass mine in the making. I'd like to note that the company's management really has a proven track record of wealth creation for investors, including the development of several world-class lithium projects that were subsequently sold for more than $1.2 billion in US dollars. They're listed again on the TSX Venture Exchange as NILI, the OTC in the US as NILIF, and the Frankfurt Exchange as DJ5C. Now, please be advised this event will contain forward-looking statements from Surge Battery Metals, and this webinar is being recorded and will be available for viewing after the event on Surge Battery Metals' YouTube page. The address we'll post in the chat later on. This will also be an open discussion, and you are welcome to post your questions in the chat when we open up the Q&A, and we will do our very best to get to all of them at the end. And now it is my absolute pleasure pleasure welcoming Surge Battery Metals President and CEO Greg Reimer, along with geologist Steve Therrien, to today's webinar around the unveiling of the maiden resource estimate. Gentlemen, welcome.
Well, thanks, Ashley. Really happy to be here to tell everybody about our maiden resource estimate. Steve and I and the whole Surge team are happy about the resource estimate. We've been working very hard on this project for the last, say, 14 months or so. It's only been 14 months since we've had our last assay results from our initial drill program. And here we are 14 months later. We filed our plan of operations with the Bureau of Land Management, and now we've filed our maiden resource estimates. So we're really happy with the results and the progress that we've made, and happy to be here to tell our shareholders and other viewers about the detail of the maiden resource estimate. And with that, I'm going to introduce Stephen Therrien. Now, Steve, he's got a great history. He's a geologist. He's got about 12 years experience working with major mining companies here in North America. He has a consulting firm, and he works closely with Surge as a consultant. And there's a bit of a story in terms of how Steve and I got introduced and how he came to work for Surge as a consultant. So for a couple of minutes, I'll just tell that story, Steve, if you don't mind. So Steve was a regular participant on a chat board called CEO.ca, and his handle was The Realist. And he, with a couple of other folks, were providing some great due diligence for members of that chat board. And one day he sent me some of the due diligence that he had done. Steve and I connected, and we hit it off. And he does great work. And so we developed a relationship, and now he consults with us also. So he's been pretty busy. You know, he's under demand with a lot of his customers, so he's not posting as much on CEO.ca as he used to, but we're encouraging him to do more. So
you're keeping him busy, Greg.
Yeah. So with that, Steve, I'm going to turn things over to you, and you can get into the detail of the maiden resource estimate. And I will tell folks that, you know, Steve's got a tremendous knowledge. Not only does he do general consulting with us, but he's built our resource model. He has all of the detailed data that we've got from our drilling, our soil samples, our geophysics, and he's here to tell you all about that. Over to you, Steve.
Oh, thank you, Greg, and I appreciate the introduction. I just want to give a shout out and say thank you to Alan, Dan, and Ian as well. They're geologists at Surge who worked with me to help generate the geology and resource model this winter. A lot of back and forth and good discussions. So we might as well just jump into the presentation. So the Nevada North Lithium Project is located in northeastern Nevada on the east flank of the Granite Range. It's about 140 kilometers as the crow flies northeast of Elko and 74 kilometers north of Wells. The amalgamated property consists of 100% owned Surge claims in blue, M3 Metals option claims in green, which Surge has the right to earn 80% of, and in purple or the stipple pattern, you have private blocks of ground. The 2024 initial resource is outlined in black, and you can see that it slightly crosses into the purple or private area on the south end. Surge owns 25% of those subsurface rights, and 25% of the resource in that area is included in the resource total. Next slide. So Nevada North is characterized by a tertiary sedimentary sequence of ash flow tuffs and interbedded claystone and shale. There's a rhyolite dome along the northeastern part of the main project area that bounds lithium mineralization in that direction. And at depth, we interpret the basement rock to be of the bottom of the basin to be a Paleozoic phyllite. Lithium mineralization is hosted in weakly calcareous claystone with seams of blue-green clay, and it averages roughly 15 meters, but can be as wide as 50 meters in some locations. Those are the clays. An example of the CU3, or what is typically the highest grade and thickest horizon, is shown in the top photograph. The clay units are laterally continuous, shallowly dipping, and separated by unaltered to partially altered tuff units. There's still work to be done to characterize the depositional environment here, mainly whether is this a caldera setting or a closed basin environment. The working hypothesis right now is that it's a closed tectonic basin environment. And to sum that up, Basically, you have volcanic activity that introduces ash to an alkaline saline lake, so salty water and the opposite of acidic within a closed basin. And in that closed basin, you have evaporation outpacing the inflow of fresh water. As that water evaporates, the total dissolved solids increase. This leads to the formation of clay minerals and lithium-rich clays. Over time, these materials concentrate in the basin center due to continuous sedimentation and evaporation-driven basin shrinkage. And then this creates concentric zonation patterns as a result of increasing salinity, pH, as you go from the basin margin, paleobasin margin to the center. And often you also see a lithium content increase. Next slide. This slide details the inputs used to design the geological model and resource leapfrog model for Surge. We have a number of data sets that have been used to guide the model, including surface soil samples, geophysical surveys, regional maps, and drilling. If we start with the soil sampling, you can see the hotter colors, which correlate to the location of outcropping / near surface clays with values over 5,000 ppm lithium. And this data was used to guide the modeling of where clay units come to surface. We have 20 drill holes drilled between 2022 and 2023, which includes geological logging information and assay data. Some really great intercepts from those drilling programs. And we also have geophysical data that's been very useful in guiding our models away from drilling. The clay units show up as low resistivity or cooler colors versus the tuff units, which show up as hotter colors. And this really helps define the extent geometry of the units. You can see in the lower left an example of the modeled clay units versus the geophysics to get an idea of how this data was used to guide the clay mineralization in the model. Next slide. So this is an overview of the geological model. The leapfrog model is 5 kilometers by 5.6 kilometers. If you look at the left side of the screen, you'll see photographs and geological cross sections of the model. I've labeled the photographs of the upper package of clay and tuff units, and you can see how it correlates with the geological model and cross sections below. So fairly straightforward geology, shallowly dipping alternating clay and tuff units. We have a few modeled normal faults across the project. In all likelihood, there's more faulting than what is shown. We just need tighter drilling to define these structures. In the plan view in the top right, you can see where we have different clay units outcropping on surface in the blue and pinks. And this lines up very well with the high-grade lithium and soil anomalies at surface. As well, you can see in the cross-section C and D, the rhyolite dome that bounds the clays going to the northeast and east. And in the lower right, you can see the average thickness of each unit with the Cu3 clay horizon having the highest grades and highest average thickness. I've thrown in the coefficient of variation for the composites within each clay unit in the table. These are really low values. And what this means is that the assay data population within each horizon has low variability, i.e., grades can be quite continuous from one hole to the next. And Surge has definitely demonstrated that through drilling. Next slide. So the culmination of all the work done to date has led to the February initial resource estimate of 309 million tons at 2,839 ppm lithium for 4.67 million tons of lithium carbonate equivalent, or LCE, making it the highest grading lithium clay resource in Nevada. The resource pit parameters for the estimate are borrowed from the Thacker Pass feasibility study, including the bulk density, with the exception that Surge used a $20,000 per ton LCE price versus $22,000 that was used in the Thacker Pass feasibility study. The resource is 100% inferred, and resources up to a maximum of 600 meters out from a hole are classified as inferred. Some important things to note: the majority of the resource is contained in the upper package of clays closest to surface, with 88% of the reported resource in that package. So that's that Cu3, Cu2, Cu1 layer, normally the first 3 that are intercepted with drilling. And at a 3,000 ppm cutoff, there's still 2.8 million tons of LCE, and the majority of that is just in that Cu3 first layer below surface. If you're familiar with Lithium Americas Thacker Pass deposit, you'll note that the reserve there is 3.7 million tons of lithium carbonate equivalent at 3,167 ppm lithium, and that's 40 years of mine life. If you take a look at the resource here at a 2,000 ppm cutoff, this is 10% more tons than the reserve at LAC, basically at the same grade. And yes, it's a resource, it's not a reserve, but forward-looking statement here. I expect there to be a high conversion rate going from resource to reserve when this eventually gets drilled out and moved to PFS. The other point to emphasize is that we still have not found the limits of mineralization here. Mineralization is still open in multiple directions. Next slide. So here's some cross sections through the resource model at Nevada North, as well as a breakdown of the reported resource by clay horizon. I've highlighted in red the upper CU3 horizon. So looking at the cross sections, you can visually see what I've been explaining. The highest grades and bulk of mineralization is at and close to surface. The overall strip ratio of the resource pit is 4.5 to 1, but obviously this is going to improve when it comes time to complete PEA or PFS. So I suspect engineers will target those upper 3 layers in an initial mine plan. I've got a table under section 1 that provides an idea of the NSR value per ton at $20,000 per ton lithium carbonate equivalent and using the recovery at Thacker Pass. And just to note, Surge is currently working through metallurgical studies, and they should have a better idea of what the recovery will look like at Nevada North soon. The point is, this is really valuable rock, and you can use these values to compare to other commodity types and get a feel of what is the equivalent copper deposit or gold deposit. And so the majority of my career has been spent in gold, and so I like to think of things in gold equivalent terms, and to give things perspective. Anything in red or purple is equivalent to or better than a 3.8 gram per ton gold deposit with 90% recovery. And that's using $20,000 per ton LCE, 73.5% recovery, and a $2,100 gold price. Whenever I do these calculations at Surge, it blows my mind. Like if you had a flat lying near surface, free dig, 3.8 gram per ton gold project at surface, it would be one of the best projects out there. And I won't tell you what the resource would be in AU equivalent, but I would encourage you to do the calculations yourself. Next slide. So there's a lot of potential to grow resources at Nevada North, as indicated from the soils, from the geophysics, and from our models and understanding. The soil samples show lithium mineralization extends 2 to 2.5 kilometers south of the resource pit, and it's telling us where these clays come to surface. The geophysics indicates that there are areas that correlate with lithium mineralization that are yet to be followed up on with drilling, such as in the northern area, where it looks like we may have tagged the edge of some clay horizons. The geophysics also gives us confidence to the south of drilling to link up clay units identified from our drill programs to the soil anomalies to the south. And you can see on the image on the right, which shows the model clays in blue and pink extending much further from the existing resource. I also think there's a good chance with infill drilling, we could see grades increase. If you take a look at the cross section on the lower left, you can see the composite grades across the clay units versus the block model grades. If Surge is able to duplicate these composite results on a tighter drill pattern, the block model grade should theoretically increase. You have to remember the estimation only allows 5 samples from any particular hole in the search radius to be used to estimate a point in space or the block of a grade. So with additional drilling, we can provide more high-grade samples from more holes and hopefully increase those grades in future resource estimates. For 2024, the goal will be to expand the mineralization footprint in anticipation of the expanded drill permit and program in 2025. In 2024, Surge will focus drilling on the southwest corner below the lithium and soil anomaly. I anticipate there'll be a news release shortly outlining those drill plans. And by doing this drilling, this is going to allow the company to have a better idea on where to begin infill drilling in 2025, where are the best grading areas, things like that. And that's it.
Thanks, Steve. Great overview, as usual. A lot of good information there. For many people, it's going to be the first time that they've actually seen that information and heard some detail that really they haven't heard before. So for those of us that are catching up to your thinking, so to speak, I know that you've been on this file for a couple of years now, and as I said, you're probably one of the fellows that knows the most about this around. What do you view for our shareholders and viewers? What do you view as the key takeaways from the mineral resource estimate?
I think it comes down to the grade and quantity of lithium at higher cutoff grades. For example, at 2,000 ppm cutoff, there's still 240 million tons at 3,167 ppm lithium, which is basically the same grade as the Thacker Pass Reserve, and that's 40 years of mine life. And this is just the first resource estimate. So I mean, you can crank up the cutoff grade, and there's still a substantial amount of lithium left. The location and geometry of that higher grade mineralization is key. So the highest grades, which you've seen in the presentation, they're at surface or in that first CU3 horizon below surface. It's flat lying, it's shallow dipping, and it will be free dig. Like there'll be little to no explosives needed, and it will be a low strip ratio. And the other thing is it's still open. It's just the beginning. I mean, the high grade soils extend 2 kilometers south of the resource, and there's no holes through those anomalies. And I think with the data that we have, we can be reasonably confident that the Surge will add additional free dig high grade clay mineralization at surface to the south and in other areas across the project.
Fantastic, Steve. Thanks very much.
Yeah, I really, really enjoyed your presentation, especially when you showed the cross sections of the graphic and then indicating the reds and the purples. You also touched on the exploration potential. So what really are the critical advantages of Nevada North compared to peers based in this maiden resource estimate?
I think the clear advantage is grade. I mean, it's if you look at other clay deposits across Nevada, it's much higher. It's 91% higher than, say, Rhyolite Ridge. It's higher grade than the Thacker Pass reserves at certain cutoffs. I think the second advantage is just the location and geometry of the mineralization. So being right at surface, the low strip ratio, it won't be expensive to mine. And I think another advantage is, that Lithium Americas has gone through the process of getting things permitted, and we kind of know what the hurdles are and the timelines are. And so being a second or third mover allows Surge to better kind of navigate, permitting and, engineering designs and things like that.
And you're talking about proximity and location. So I'm curious as to how much of the resources within the high grade CU3 layer and what is the grade of that specific layer?
Well, if you go back to that slide, it's outlined in that slide. That CU3 layer, it accounts for a lot of the resource. So I mean, at a 3,000 ppm cutoff, what did I say? It's 2.8 million tons of lithium carbonate, and the majority of that is just in that CU3 layer. So it's that's the main driver. That's going to be the main driver of the economics at the project.
That's helpful. Steve, why were there no indicated resources? Do you have an idea of the drill spacing that'll be required to classify indicated resources?
Yeah, so at the time of the resource, we didn't have bulk density samples, and so we borrowed the Thacker Pass bulk density. So you need to have your own measurements to have an indicated resource. And there's also a couple other things. I mean, the drill pattern isn't a regular drill pattern, and so it's not the best data to calculate variograms and determine directions of continuity. So we need to have kind of a more regular drill spacing, our own bulk density measurements, and the geophysics is also used to kind of guide the model in a lot of places. So with that infill drilling, we'll be able to classify some indicated resources. And we think for indicated resources, we probably need a drill spacing of 250 meters by 250 meters. And so people can kind of look at the area and calculate what it would cost to drill this thing off to indicated and measure maybe as half of that.
Okay, fantastic. And so I guess if you were to break it down sort of in layman's terms, what are we talking about as far as time frame or possibility, anything like that?
Well, I think, in 2025, with that expanded permit, Surge will be able I mean, it's not going to take a lot of drilling to drill this thing off to an indicated resource, and to add some measured resources. I mean, with that's a pretty wide spacing, and to have reserves, you need to have indicated resources and measured resources. And so I think things are going to progress very quickly with that 2025 program. They'll do the infill drilling. You'll have indicated and measured resources, and then we'll have the PEA, and then it's off to do a PFS. So I think it's going to be boom, 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 and a pretty rapid progression to initial reserves at Nevada North.
Yeah. And to really dovetail on that, Greg, I'd like to turn it over to you. The resource estimate highlights a significant expansion potential for the NNLP, with the known footprint of mineralization still offering substantial room for growth. So I think it might be helpful for the listeners and viewers to elaborate on the company's strategy for further exploration and expansion of the resource, including plans for additional drilling and exploration activities.
Right. Thank you, Ashley, and thanks, Steve, for that great overview. You do such a good job on that, and I'm sure that our shareholders and other listeners here are very appreciative of your information and your expertise. Really, it's the first time that we've done this, and I think that everybody's going to benefit in terms of what they've seen from you today. So, just to talk a bit about our plans going forward with respect to drilling, Ashley. We do plan, of course, to have a spring and summer drill program this year. We're working on developing that right now, and we're hopefully going to be able to issue some information to shareholders in the near future on what that will look like. So what we're trying to do, of course, is we have a 5-acre disturbance that we've been able to work within, and that's all that we're allowed in terms of the permit that we have with the BLM right now. And from our 2022 drill program and our 2023 drill program, we've remediated those sites, and we've talked to the BLM about getting some of that disturbance back so that we'll be able to have a comprehensive drill program this spring and summer. What they're waiting for is for things on site to clean up a bit. There still is snow in some areas of our site as well. The access is a bit of a challenge, although one of our geologists, our senior geologist, Alan, was out there last week. But it's still a bit muddy and whatnot. And anyway, the BLM wants to get out and they want to see what the remediation looks like from 2022 and 2023. And we're reasonably confident that we're going to have that space to drill again this year. As well, we've got the kind of M3 JV property that Steve outlined in his presentation, and we're looking to do some drilling on that ground also. So we've got a fairly robust program for this year. As well, we filed our plan of operations with the BLM in November, and we're working through that process with them, and we'll hopefully get that permit in kind of November, December of 2024. We've applied for a 250-acre disturbance with that plan of operations permit, and so, as Steve says, we'll be able to use that to further drill out the resource in 2025. We had an update meeting with the BLM last Thursday on that plan of operations permit, and things are proceeding well from our perspective and as well from their perspective. So anyway, it's a great outlook.
Okay, fantastic. You talk about trekking through the muddy terrain, the snowy terrain. Anything outside of that, do you foresee any potential challenges that the company anticipates in the process?
Well, in the process, in terms of moving things along, we've got a great plan this year. We're currently working through the metallurgical work that Vijay Mehta, our board member and kind of world-renowned processing experts, doing with Kemetco. That work is proceeding. We're taking our time at each step to make sure that we go through the process and do things right. So it's taking a little bit longer than what we had anticipated. So, I know that folks are going to be disappointed out there, but we're not going to have those results out in the next week or so, but we're going to get them out as soon as possible. We're currently in an RFP process where we've issued an RFP for an engineering firm to do our PEA study, and that's going along quite well. So I think for what we've committed to deliver this year, we're on track and don't see any major hurdles at this point.
And I'm sure, everyone understands that timelines can change. The shareholders very much, I'm sure, appreciate the transparency here. Given the recent announcement by the U.S. Department of Energy's Loan Programs Office regarding financing for a lithium carbonate processing plant in Nevada, how does Surge Battery Metals perceive the evolving landscape of domestic lithium production in the U.S.? And really, how does Surge plan to position itself within this evolving market scenario?
Yeah, I think that announcement from the Department of Energy regarding the Thacker Pass loan is substantial. It is a huge step in developing a made in the United States battery supply chain, and it's a huge step in kind of lithium clay mining. It underscores the confidence that folks have in clay and lithium separation, and really, it's going to change the face of lithium clay deposits and lithium clay production in the United States. So it's a positive thing all around. It's great for us as the Thacker is kind of paving the way for us, and we're moving along as quickly as we can. They're several years ahead of us, but we're moving along also. We've looked as a company. We've looked at the programs with the Department of Energy. The Department of Energy programs are for infrastructure kind of above ground, and we're not at that stage yet, and Thacker is. The Department of Defense has some programs for things that we would likely qualify for, but because of the political situation of the U.S. government and them not having their 2024 budget yet, the Department of Defense does not have any additional money at this point. So we're in contact with those people, fairly regularly. I, in fact, had a discussion with them last week. So we're positioned well for that when those opportunities do come along.
Yeah, despite some of those hurdles, perhaps you could discuss really the strategic significance of having a domestic lithium source here in the US, and particularly in terms of supply chain resilience, national security, reducing reliance on imports. Could you talk a little bit about that?
Yeah, I mean, I think that it's, and obviously the U.S. government does also. It's a very challenging situation where 85% of the batteries worldwide are controlled by China. And here you have a world superpower, the United States, that relies on China for a critical mineral. And so, the government has taken a strategic decision to build a battery supply chain in the United States to not be so reliant on one country. And I think that's a wise decision, and it's going to take some time. They've got a program that they've outlined where they're subsidizing R&D, subsidizing infrastructure, and subsidizing kind of retail purchases by individuals. So I think that they're on the right track. I think the policy is good, and I think it's fairly resilient too. People have often asked me in the last little while, with the U.S. elections coming up, how that a change in government might affect these strategies and these programs. And I've had a lot of discussions with folks in Washington D.C. about that, and really. The makeup of government in the United States is such that most of these programs are already embedded in legislation, and the changes that can be made are very minimal. But the key thing too is that whether you're a Democrat or a Republican, the challenge with the situation here is pretty straightforward, and the country does have to develop their own battery supply chain. And they'll go about doing that the way they've set the path out for, and each party has got their kind of amendments and adjustment to that path going forward. So as the folks in DC said to me, when the Cold War was on, it didn't matter whether there was a Democratic president or Republican president. There were still challenges with Russia, and so in this situation, they're telling me that it doesn't matter whether it's a Democratic president or a Republican president. There'll be challenges with China and the battery supply chain in the United States.
Well, that leads me right into our Q&A and our chat with those listening and watching. You're talking about government relations, government subsidies. We did have a question come in from one of the investors about, really explaining a little bit more about the potential for subsidies in the United States to really support your project specifically?
Yeah, well, I'll just go back to the two funding mechanisms that are available right now. The Department of Energy, as I said, they fund infrastructure kind of above ground, and a key to that funding opportunity is it's a loan, and you have to have the balance sheet to repay the loan. And we're not at that stage yet. We're not constructing above ground, and we don't have the balance sheet to repay a loan at this stage. So that's something for the future for us if those programs are still around when we're at that point in time. And again, the Department of Defense funding, I think that we're preparing kind of our internal approach to that. And when those opportunities are funded with budgets, we'll be able to take advantage of them. I mean, we've introduced ourselves to folks with the Department of Energy and the Department of Defense, so they know well about Surge and are really happy that we're participating.
Okay, terrific. I'm just going to another question here. And this one might be for Steve, a little bit about the production and perhaps it could be fast tracked. That's a question we have from the audience.
I think it just comes down to, how quickly can you advance the permitting process? And, I think Surge just has to get to a pre-feasibility study as quick as possible and submit, mine plan of operations and get into, the permitting framework as quick as possible. Greg, I don't know if you have any comments on that.
No, I think you're bang on, Steve. And I guess all that I could add to that is we've made tremendous progress in the last 14 months with respect to advancing this project, permitting and whatnot, and we'll just continue on to do that.
Okay, terrific. Another question, is it feasible for Surge to send their claystone to Thacker Pass for processing so that Surge doesn't need to build processing facilities themselves?
Yeah, that's a good question. And I had an initial discussion with some of the folks with Lithium Americas about that, and that's kind of partisan feasibility work that we need to do and really haven't done as yet. I mean, it's about 180 miles from where we are to Thacker's project as the crow flies. And so we're going to have to look at the cost of transportation and whether that makes sense and whether they've got the capacity to do it or not. So, but it is something that we've had an initial discussion on anyway, but nothing in depth.
Okay. Okay, great. Another question here, and you talked about the financing, you talked about the loan. Somebody had asked, at what point would it be prudent to seek additional financing, and what possibly could be alternatives?
Yeah, that's again another good question, and at this point, with the funds that we have available to us right now. We've got enough money to get us through our program for 2024 and have a little bit left over. We will have to raise money this year in order to do the kind of drill out in 2025 that we anticipate doing when we get our plan of operations permit. So at this point, we're looking at all options open to us to accomplish that funding. And it's early in the year, and we're planning on working through that over the next several months so that we're not caught out at the end of the year.
I mean, clearly you're doing amazing work based on, everything you're saying. And of course, Steve's presentation. Let's talk about, I don't know if you would call it the elephant in the room, but just the markets in general and where we're at. And, one of the visitors to this webinar had asked, why hasn't the market responded so positively to the stock? And so what's the answer to that?
Well, I mean, good question. And I guess if I knew the answer, I could solve that problem. We'd have a different share price today. I think that there's a lot of things that are kind of inputs to where the share price is now. And the way we look at things as a company is that we're well positioned. We've got a plan. We're moving forward. We're financed for that plan. In the out years from 2024, we're kind of looking at what we need to do to complete this project or continue the project on. In terms of the market, there's lots of things that are kind of focusing in on the share price, demand and supply and forecasts, and we kind of think that stuff will kind of work itself out this year, and that later in the year that we'll hopefully be looking at a different result. But in the near term, it kind of is what it is, and all that we can do to impact that share price is to do things like this, to talk more about how great this project is, and to continue to execute our plan and develop confidence in the marketplace.
And we talked clearly the markets, and let's move on now to NASDAQ. I have a question about an IPO, around government support in that. Is an IPO on the NASDAQ being considered?
Yeah, we've talked about having a listing on a major board, whether it be in Canada or the United States. We do think it's a bit premature at this point, but something that we do have in our plans in the out months and out years. It's certainly a lot of work, and it does cost a lot of money to do that also. Notwithstanding that, it's something that we have in our future plans for sure.
Okay, great. And Steve, I'd like to turn this question over to you, really, and comparing resources. Maybe you can outline the similarities and differences between Thacker Pass and Surge Battery Resource. That's another question that's just come in specifically.
I mean, they're quite similar in terms of grade. The Thacker Pass resource is larger than Surge's at this point. The reserve size of Thacker is quite similar. I think one difference is, where the high grade is located. If you look at a cross section in the technical report of Thacker Pass, you'll notice that the higher grade is a bit further down. They're going to have to remove more low grade to get to that high grade. So it's kind of Thacker Pass upside down. The high grade's right at surface. And then, in terms of clay types, as much as 12% is smectite type clay, and up to 11% is montmorillonite with minor illite. So I think Thacker Pass is dominantly illite, and illite, I believe, has slightly higher. It has higher grades of lithium. So Thacker Pass might have at the high end higher grades, but overall very similar.
Another question, I think, in relation to that, with the maps, and you're talking about the cross sections, what steps are being taken regarding the private land in the middle of the resource map, and are there plans for purchase or lease?
Okay, well, I can take that one, Ashley. The private land in the middle of the resource is got an ownership, separated ownership. There are subsurface rights and surface rights. The subsurface rights, we've acquired 25% of the subsurface rights, and that 25% is included in the resource that Steve's spoken about. The other 75% is owned by a mining company in Australia called Evolution Mining. We've been in touch with those folks and have had discussions with them, and are continuing to have discussions with them. The surface rights are owned by a company called the Salmon River Cattlemen Association, and that's a conglomerate of local cattlemen that have several 100,000 grazing acres of land that they use to kind of graze their cattle through the summer and fall. So again, we've met with them, we've had discussions with them, and those discussions are ongoing. So these things on both sides, don't happen overnight. And all I can say is that we're pretty comfortable with the point of what the discussions are, and we're going to continue on with the discussions.
Fantastic. Any final thoughts, gentlemen?
I think that this has been a great session. I think that Steve did a fantastic job and provided some great information to our shareholders. I think it's a good opportunity for us to answer some questions, that folks have that are not directly related to the technical aspect of the resource. So all in all, I think it's been pretty good. I'm happy to hear some feedback from shareholders, and I'm sure when I go on CEO.ca later this morning, there'll be a lot of input for me there. So thanks very much.
I would like to say that CO.ca apparently was blowing up in a positive way after your story.
Let's hope.
All right. Any final thoughts, Stephen? Thank you so much for your time as well.
I mean, I just mimic what Greg said. Happy to kind of go through in more detail the details of the resource, and I think that Surge has a lot of positive catalysts ahead. So I think it's something that you need to have on your watch list and pay attention to.
And we really appreciate the transparency here, opening this up to your shareholders. President and CEO Greg Reimer, along with geologist Steve Therrien of Surge Battery Metals. Thank you both for your time today. And thank you all for joining us. For any additional questions or for questions that we may not have addressed during this webinar, we encourage you to visit info@surgebatterymetals.com. We will list that in the chat. And certainly this was a very informative discussion. Again, this webinar is being recorded. We will be available for viewing after the event on Surge Battery Metals YouTube page and on all of their social media platforms. Until next time, I'm Ashley Berry. Thank you for the privilege of your time as we discussed this very important mission from Surge Battery Metals and the unveiling of the Maiden Resource Estimate. We hope this helped all shareholders and potential investors understand the great work they're doing. Stay safe, and thank you all again for joining.